All right, let's see what Byron's got for us today.
Do you know what your DTI is? Do you know how it's going to affect you buying a home with your VA loan in 2025? Hang out. Let's talk about all the important parts of this.
You know what? That's actually a great question because this is what can make or break your loan approval.
If you think this is going to help you or another veteran use your VA loan, please hit the like and share button. Watch all this content. It'll help us share our message and get the right information out to veterans. Your DTI is a calculation lenders use to determine your financial health. Think of it like a financial thermometer.
Yep, that's right. And the best part on DTI, you actually have some control over the numbers. Kind of like this. Did you know, right, that unlike your credit score, which can take time to go up and down, it takes time to improve. DTI can be adjusted quickly, fast, by lowering debt or increasing income. Kind of a simple game we can play to make sure we qualify.
It comes in two parts. The front end of your DTI ratio is your proposed monthly mortgage payment divided by your gross income, which means pre-taxes and pre-deductions. Now, the back end of your DTI is your proposed monthly mortgage payment plus everything that's on your credit report: car payments, child support, credit cards, that kind of stuff, divided by your gross monthly income.
Hmm. Okay, so gross income means before taxes. So take home pay will always be lower. So keep that in mind when looking and setting your budget. We're looking at gross income, not take home income.
Some types of loans have limits on your back end DTI. So you can only have a 49%, or some lenders have overlays that'll only let you go to 55%. The VA loan does not have a DTI limit. There is no line in the sand.
Boom, that's it. That's one of the most powerful things about the VA home loan. This is why the VA loan is one of the most flexible loan options out there.
Even if you have a high back end ratio, it's okay. You have residual income to help you use your VA loan.
Unlike conventional loans, where DTI can stop you in your tracks, basically, VA loans actually look at the bigger picture, including residual income. I bet Byron's going to talk about that too.
I've gotten loans done as high as 78% back end DTI because of residual income was okay.
Okay, yeah, that's incredible. But just because you can qualify, it doesn't always mean, right, that it's the best move. Okay, so DTI flexibility is a gift, but we have to use it wisely. Make sure you're comfortable with your payments, not just approved for it.
Residual income is a calculation that really means what you have left over after you pay your bills.
Yes, that's exactly right. This is a game changer for VA loans. It's about what you can actually afford, not just what the math says you can borrow. Sometimes they're very different numbers. So think of residual income like this, okay? You have and you need breathing room, right? The more you have left after bills, the less financial stress you will feel month to month.
Things that are taken in consideration in residual income is number of family members, area that the home's in, square footage of the home, taxes and insurance, maintenance costs for the home, and the size of the home. You got to be able to take care of all of those things with your residual income. And normally, as long as you have residual income like $1,000 a month, your VA loan is fine. When we're talking about a high DTI and residual income offsetting it, there are some things you should know. It is not always smart to have a high DTI and a residual income that saves the deal and makes it happen, because that means there's less money in that family if something arises. I have seen high DTIs pass because of residual income, but have other compensating factors to make it make sense. Because in the end, that's our goal, is making it make sense. Having a spouse that's not on the loan with income, having a second job that we can't use because you haven't had it for 2 years, or starting a business that is brand new and not being accounted in the income calculations. All of these reasons are great reasons for you to still be able to buy a home and have residual income basically hold the deal together, which is okay. But our worry is about the veteran in the end of the deal not eating noodles every night.
Couldn't agree more. Man, this is just so important because a lender can say yes doesn't mean you should stretch yourself too thin. You've got to take care of the house and the family. So when planning your mortgage payment, you know, don't forget. Don't forget things like groceries, gas, savings, and frankly, fun. A home should be a blessing, not a financial burden that keeps you locked in from not doing the things that bring you a lot of joy.
If you have more questions about this, don't hesitate to reach out to me. You can leave any question in the comment. I answer everything there. If you want to talk to me about helping you with your VA loan, all of my information is in the description of this video. We're licensed in 27 states, so we probably will be able to help you.
Absolutely. Do not guess when it comes to your mortgage. Ask questions, get guidance. Make sure you're set up for success. That's what we love doing. Smart home buyers ask questions and get expert help. We're here for you.
I'm Byron Thomas, a veteran and a loan officer from Be My Neighbor Mortgage. Peace.
Call Byron. His contact information is down below. Check it out.